Already done, ma'am.
Already, so.
Okay, I would like
Go for it.
I would like to call the meeting to order.
I know we're okay.
Let's begin by
Your own
doing the
packet.
Pledge of Allegiance. Have the flag now.
Okay, have your phone out, just ringing.
Watch me knock it over.
I pledge allegiance
To the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, and would you mind giving us your name, please, in the audience? Joan. Oh, hi. Okay. And did you want to make any? Do you have any? Just here to observe?
Yeah.
Well, welcome. I'm glad you came. Okay, so we'll move on then right into our Cornerstone presentation. As you know, Cornerstone, but the audience may not, helps us with our financial information, our investments, that type of thing, and they're here to make a presentation. So I'd like to welcome Carly Duggan and Greg Miner, and I'll turn it over to you guys.
Great, thank you very much. So again, Greg Miner, Carly Duggan, Cornerstone Financial Partners. We are overseeing the library's investment portfolio. So I just wanted to recap where we've been over the recent history in the portfolio, go over the current allocation, and also look ahead a little bit, look at where markets are, where we're positioned, kind of how we see things going forward, and how that will impact the investments for the library. So before I dive into this, is there anything that we need to know as a forward look into next year as far as potential need for funds or withdrawals that may come about?
Not on the table at this point.
Okay, okay, perfect. All right, so I think we should start. If you look in your folders in front of you, on the left-hand side is where we will begin. This is a current look at portfolios and performance, and then we'll shift to the right for that forward look on markets. The first sheet here is a report just showing you the performance in the portfolio over the last 12 months. So it has been a very strong year in markets, very strong year for your portfolio as well. So you definitely benefited from market returns. You're up just shy of 22% over the last year. We did have about 28,000 of withdrawals in the portfolio, so that will have some impact on performance, but nevertheless, a very strong return for both equities and fixed income. Current portfolio, we'll get into the details on that, but you're about a 50-50 blend between equities and fixed income. So to have a 22% return on a portfolio of that allocation is great. You shift behind that.
Not to be expected.
Yes.
Going forward
We'll
year
get to
over
that.
year.
We'll kind of temper
That's
your
kind of
expectations.
unusual.
Yeah, temper your expectations a bit. Behind that is a deeper look at current makeup of the portfolio. If you look at that sheet, it says investment overview at the top. The top right-hand side, there's a little pie chart that gives you that breakdown on how the portfolio is currently positioned. So like I said, right around a 50-50 blend between stocks and bonds. And that's the allocation that we came to as a best fit for the library's risk tolerance and performance goals as we've measured sort of objectives over time. And this was the best fit for all of those goals that were in place years ago when we set this. Shift to the left on the top, that gives you a look at performance. So this is taking it back to the last time that we met, right? In the beginning of 2023. You can see that far right column that says custom at the top. So this is performance from January 23 to date. So you're up just shy of 12%, 11.85%. Follow that column all the way down and you can see what that looks like in dollar terms. So we started with 546,000. We had 33,000 of withdrawals over that time span. And then the next two figures are growth figures in the portfolio, so market value growth and income, right? So that combined gives you that bottom line figure. Investment results, a gain of 123,000. That's 11.85 annualized. Okay.
If I could just ask a question, the 33,000 in withdrawals, was that for something specific or was that just operational throughout the year?
I can answer that. So we use the trust fund money for both some programming, some operational, and then we also, the trustees generously reimburse any employees who are working to get their master's degree in library science. So that's where a lot of that, not a lot of that money, but where some of that money comes from as well.
Right, very good. So that's just a little over 5%, 5 to 6%, and given the rate of return over the last year, it's certainly sustainable, but not an unusual amount going forward, in case you have those same needs this coming year.
Yeah, the initial spending policy objective was for the portfolio to sustain a roughly $20,000 a year draw. So, and we've seen significant growth since that spending policy was set in place. So, I'd probably say it's certainly sustainable at that rate. So, if you just shift to the left, this is just showing you performance on shorter time frame measures, right? So, we've got a last 12 months performance, just shy of 21% there through the end of October. That year-to-date measure takes into consideration the bump that we've seen post-election. So the markets have really rallied after we got through that event and finally got a result with Trump being nominated, and markets kind of resumed their uptrend from there. So nice strong recovery from there. Month to date, the stock market is up just shy of 5%, and this portfolio, fully invested in stocks, obviously we catch all of that, but still up 1.6% on the month. So a nice strong continuation of this uptrend that we've seen for the year.
And one of the reasons you see the bump in the market after the election is that the uncertainty is away. It's really not about who won or who didn't win the election. It's that, okay, now we know what we're dealing with, the uncertainty is gone, so the volatility will be gone, and we can proceed on.
Any questions on that before we talk
Nope.
about the forward look? All right. So on the right-hand side, we've got a few slides from a research partner that we work with, JP Morgan. They do a great presentation called Guide to the Markets. And we just pulled out a few slides that are, I think, relevant for your holdings and kind of where we see things going forward. Get to that first page, second page after the cover sheet there is page 4. So this is a look at the S&P 500, so the 500 largest stocks in the U.S. stock market alone, okay? So not looking at international equities, but this is a performance chart going back to 96, right? You can see that. Follow that to the right, you can see we're riding up into the tech bubble, 2000, and we had a crash, rise up again, we had another crash after the housing bubble, right? And we've been on a general uptrend up until the COVID implosion from that point forward, right? Bumps in the road along the way, of course, but a general uptrend after the housing crash there. And what you can't see, if you mark it all the way to the far right, where we are today, November 12th is the price point there, so just shy of 6,000 now. We've actually broken above 6,000 on the S&P. And that number that they've marked there is the PE ratio, so it's the price to earnings ratio, so a broad valuation measure of the market of 22, right? And what you can see at those other peaks, other points where the market has crashed, is that's a pretty consistent measure of valuation where the market seems to be overvalued and can sell off. However, this time, if you go to the next sheet, the market makeup has changed a lot in recent history where that measure really isn't as reliable as it has been in the past as a timing measure, right, for valuation. Because of the size of the biggest companies that make up that index, fewer and fewer companies are making up a larger share of that market. So it's bringing up that average, so the overall market isn't as overvalued as that would indicate. So if you look here, this is showing you the top 10 stocks, right? Their current PE is 29.5, the average is 20, right? So pretty pricey. The remaining stocks, so the remaining 490 stocks of that index are under 20, right? Giving you an average of 22.2. So it's just those 10 stocks that are bringing up the average because they make up such a large share of that index. And it's really well represented in that top right chart there. November 12th, you can see those 10 stocks make up 37% of that 500 stock index. Look back to the tech bubble, right? Crazy market where we had overvaluation of all kinds of companies. The largest 10 stocks at that time, when we were just uber overvalued, was only 24. So this is a really unique time in markets where we're not as concerned about that overvaluation measure in equity markets because of the makeup of that index. Okay?
And so what may be familiar to you is those top 10 stocks, and they're listed down below in the smaller print there. It's everything that you know. It's Apple, NVIDIA, Microsoft, Google, Amazon, Meta, Tesla, Berkshire Hathaway, right, Tesla and Lilly. So they're familiar names, but they make up a huge percentage of that index. And so with those soaring, that's what's happening here.
And then on the next page, another really key data point and component of markets and valuation and how those can be impacted is interest rates, right? So we've had an elevated level of interest rates, not just here, but globally. So central banks around the world increased interest rates and attempt to bring down inflation post-COVID, okay? And now, all of these central banks, we've had 2 interest rate reductions here, and other central banks are making the same types of moves as well. So this chart on the left is showing you how those rates have trended up, right, for all those major central banks.
Everybody see that? A huge mountain?
Just a vertical ramp. So we increased rates really fast, and the projections are to bring down those rates, not quite as quickly, but still relatively quickly nonetheless. And we've already had a pretty aggressive initial cut. So the Federal Reserve did 2 cuts in one at their first meeting at 50 basis points, and the last meeting they did another 25 basis points. So pretty aggressive, and that's important for 2 reasons. So that reducing interest rates, right, provides cheaper capital for the economy, which greases the gears so the economy can continue to grow and keep churning. And it also provides a boost to your fixed income performance. When interest rates go down, the price of bonds go up, right? So half of your portfolio is invested in fixed income. So that will have a positive boost for prices in the portfolio going forward. Okay, so if we follow that trajectory going forward. If we go to that next page, you can see what that impact looks like in all of these different types of fixed income instruments that are out there. So the chart on the left shows you all different types of treasuries, goes down the list, 2-year treasuries, 5 years, TIPS, 10 years, and then different sectors of corporate fixed income as well. All these different types of bonds, what their current yields are. But what's important is you shift to the right on that chart. It says fixed income returns in different interest rate scenarios. This is showing you what the price performance or price impact is of a 1% drop in interest rates on all of those bonds. Okay? So when you have a 1% drop in the prevailing interest rate, a 10-year treasury, which is the broadest measure of just a general intermediate bond, you can have a 12% bump in the price of that bond, 1% drop in rates. And as we saw in the other chart, the trajectory is to show another essentially 1% drop over the next year, so you can have a real benefit to that fixed income allocation on a forward look.
So over the past year, you've had largely equity returns that gave you those returns. Okay, that was the stock market that gave you those. Now, what we're talking about with the interest rates reducing is that you're going to start seeing reward for holding the fixed income because you're going to start seeing those perform as well.
Go to that next page. 7 says market returns around the start of the Fed cutting cycles. So we can look to the past and see other times when the Fed has started a campaign of reducing rates, and what was that impact on different areas of the market as a result. So the chart on the left shows you historically what happened after that first cut. So these different regimes, 1995, 2019, 1984, 1989, all had really strong positive impacts, not just on fixed income, but on equities as well. Okay, so those were all positive. We did have two time frames there where it was negative, 2007 and 2001. Those were severe recessions. Okay, so if you can avoid a scenario where you do not have a severe recession, it's net positive for equities. That's the common denominator for those two outliers.
Which we're clearly not facing right now, is any kind of recessionary indicators. Market is growing, the economy is growing. The task is really still getting a handle on the inflation, which is still coming in just a little bit hotter than what we're looking for.
So the Fed is still, really working hard to target that. That's clearly their primary goal. We had actually an inflation figure today that was just in line, but it was still inflation up, right? Up 5.2% as expected. So they still have work to do, for sure. This chart as well shows the impact on the right side on fixed income returns, right, as a result of Fed cutting cycles. And you can see, similar theme, all of those prior times, you have positive forward returns expected for fixed income as well as you start that. So it's not just a stock impact, it's also fixed income as well. All right.
So net is, we're not concerned about the market coming down. Of course, there's always volatility. It goes up and down, but the trajectory going forward is still up. We're still looking at a bull market at this moment.
And the last slide, we just like to always finish on as a reminder to stay the course, right? Stay invested. This is a look at the best performing asset class for each year is listed on the top, gradually all the way down to the worst. So each column is a year. And what you can see, that white box that says asset allocation, and then we have those connecting dots and lines that go all the way through it. So that's not quite a similar allocation to yours. It's a little bit more aggressive. This is a 60-40 roughly portfolio, not a 50-50 like yours, but the idea is the same, where you're spreading your risk around by investing across the board, right? You have a diversified portfolio. You never get that top performing box by being in a diversified portfolio, but you're also never at the bottom of the heap. You get a nice, consistent, repeatable return. It doesn't give you a lot of volatility and lets you sleep at night. Okay, so that's the theme. We want to remain invested and remain diversified with the portfolio. Okay.
Any questions?
No. Thank you for all that work.
No, happy to. For having
So
us.
you're still comfortable?
I have a question.
Sure.
You mentioned the withdrawals of around, what was it, 33,000 this year, and you said that's sustainable. Do you mean you're comfortable with us withdrawing at, like, do you have a cap in mind, or is there a number like that you would recommend or just stay right at that?
We'd like to stay between 4 and 5% of the total portfolio.
Okay.
So that's pretty much a barometer there.
Okay.
You know, you can exceed that when you have great market returns in a given year.
Yeah.
But for the most part,
Okay. Great. Thank you very much.
Yep.
I've got two things. One, can you hear me?
Sure.
That's not my first question. I don't quite understand what is meant by first cut.
The interest rate cut.
Oh, that's the first cut by the Federal Reserve, cut of interest rates, right? So the Federal Reserve controls the short-term lending rate,
Okay.
so that's their first cut. And we've had 2 of those already this year, right?
And the first cut was
September.
September.
Yeah.
And
50 basis
the other thing, it's not a question. I think it's great that every year the two of you are coming. It's a calming effect to have the same people, you know, you're like family. But it's just really, to me at least, it's a good feeling when a company keeps the same people, so
Thank
I thank you.
That's good to
Yes.
hear. Thank you very much.
Look
Been over
forward to
20
next year.
years.
I know.
Over 20 years with you.
You've seen me grow some grays. In that time.
I know he doesn't look old enough to be in the business that long, but he is.
That's true. That's true.
Yeah, and it's been a pleasure to see most of the same faces, but new, fresh faces as well with you all. So thank you for having us.
Great, you're excused.
You're released. Thank you.
You're welcome. It's our pleasure.
Yep. Sounds good.
Yeah.
We have a do.
Thank you.
Not a lot,
Yeah,
but
just in case.
yeah. Yeah.
Okay. So, getting back to business, I want to, everybody, thank you. Everyone got a chance to review the email that went out regarding the meeting. So I wanted to vote on approval of the minutes from the October 9th meeting.
Motion to approve?
Second.
Okay, first by, is
Corey,
that you, Corey?
second.
Okay, and
Yep.
second by Natalie. All right, all in favor?
Aye.
Aye. Any opposed? Okay, motion carries. I'm so sorry about the noise, folks. All right, so let's move on to the trustees report. The chair's report, I don't really have a lot this month. One of the things we were going to talk about, but we'll discuss it again under old business, is the tuition reimbursement / scholarship fund that we have. That was part of what Carly and Greg were alluding to. That we took out a little more money this year, and that's something we'll talk about then. So I'm going to kind of table mine, and we'll go right into the treasurer's report.
Okay, so Julie, I'll give you this paper. Our beginning balance was $641,420.07. We did have income of $955.89. Our expenses were $1,612.30. So the change in value with those items was $13,836.91. So our ending balance is $626,926.75. So year to date, we are up the 9.67%. We're not off much from last year, which at this time last year it was 10.58. So I mean, not even about 1% off. So pretty good compared to last year.
Thank you. Can we vote to approve the treasurer's report, please?
Yeah, I'll make that motion.
I'll second. Okay, second by Jessica. All in favor?
Aye.
Aye. Any opposed?
Thank you.
Okay, motion carries. And if I can interrupt real quick, you snuck in, Dave. So I just wanted to acknowledge that. He's been here the last couple of meetings as an observer, so thank you for coming. Okay, let's get back to item 7 on the agenda, and that would be the director's report. And I will turn this over to Noel.
Alrighty, so you saw my report, and I'll take any questions, of course. Just for new things, and I'll say stuff without saying any names, but just as an awareness thing for the trustees is, and I don't. This just seems to be a new trend of people who've been trespassed years ago, suddenly like trying to reappear on the horizon at the library. So I've just been made aware of somebody who was trespassed back in 2018 who's kind of calling around to different libraries and actually is called town hall, sort of. And my feeling is that they are trying to see if they can, if that people remember that they've been trespassed or not.
Describe what trespass is for the.
I can. I can. So usually, the only time we trespass people at the library is usually if there's some kind of egregious behavior. Most of the time, it's not one incident. It's usually a buildup over time where we've dealt with them and they've had repeating bad behaviors, and then there's a touch point where we're like, okay, that's it. So most of the people that I've been dealing with that have been cropping up have been from the previous director. Has trespassed them. So when you trespass somebody, you are usually, you give them a letter that says you are no longer welcome at the library due to usually behavior, a specific behavior or something that you've broken, policy that you've broken. And trespass letters are supposed to have, are supposed to be dated with how long the trespass is to last. So it can be forever, or it can be, a month, it can be 6 months, it can be a year. And the police also get a copy of the letter as well. So the library keeps a copy, the person who is getting trespassed has a copy of the letter and is informed, and they usually get certified mail so that they know that it got delivered. And then the police also have a copy of it as well, and they get a receipt from the certified mail as well, so they know that it got delivered too. So the last paragraph of any of these letters says that if you would like to appeal the decision, that you may do so in writing to the library trustees. So I'm just putting you all on notice in case, just because this particular person, and I'm not going to bring up any names in case anything happens, but just in case somebody does apply in writing, like they would just send it to the library, to the trustees, and I would pass that along to you. And at that point, we can have a discussion about the person and the behavior and whether you feel like they deserve to have another chance or not. It's really kind of up to you. I only know of, from what I've seen, of like one instance of somebody appealing to the trustees, and I think but that was years ago, was not during my time, and I don't think that they prevailed in that or not. But just I had somebody like a few months ago similarly who was been trespassed years ago and then was looking to see if they could come back again. And so it's just an interesting thing. The interesting thing, this particular person does not live in Danvers, does not have a Danvers library card, has no connection to Danvers besides the fact that I guess they used to come to the library here. So it's sort of an interesting, the person they talked to at town hall was kind of thought they were a resident until the end of the conversation. And they're like, I spent all this time, they weren't even a resident. But just in case that comes along, I wanted the trustees to be aware of what could happen in that regard. So that was just sort of a new thing that happened recently. So otherwise, does anybody have any questions about anything in my report? It was kind of a simple report, I guess.
I had one question. For the person who has the staff turnover.
Yep.
Are they?
I'm sorry, I can't hear you.
Can you hear me?
Yeah.
The staff turnover. Are they doing any exit interviews? I think I've asked this before.
So they do an exit interview at Human Resources.
Okay.
So Human Resources offers them an exit interview. Yes.
Okay. So all right. So if anything comes up, like we have documentation on.
Yes.
Yes.
Yes. Yeah. Yeah. And it's funny with Chris has been with us for quite a long time, but he when I saw that job get posted, I was like, he's going to go for that job. It's a perfect job for him.
Yeah.
So as soon as I saw it, I was like, oh, he's going to go for that job. I know it. So I wasn't surprised when he told me he took it, and it's better money and all that kind of good stuff too. But it is a perfect for him job. So I'm happy for him that he got it. But sad for me, but happy for him. Any other questions or anything?
I should have asked the children's librarians this directly because I keep meaning to and I've forgotten. But my kids have noticed that the early release Crafternoon is no longer happening. Do you know? Is there any particular reason why?
I don't have an answer for that.
I'll ask them next time I see them.
I don't
I'm sure
know
there's
why.
a good reason. I just wasn't sure if maybe it was something,
might
an
just
incident or
also
anything.
because it's still the beginning, like they're kind of getting back into the groove of
Yep.
the school year. So it might just be that they hadn't brought it back yet, but
No
it
worries.
will come back.
It
I can't imagine doing it for
Don't worry, it's every month.
every month there's that early release day. But yeah.
Only like 6 more, I think, right?
Yep. So otherwise, so we got our new 2 staff part-time people who started, and so they're doing great. So otherwise, like I say, like it's never, there's never a moment where it's a boring time at the library. There's always something happening. So I actually have, I think it'll be, easy to fill Chris's position. So we'll see, but I'm just getting that updated, the job description, because it was last updated I think 7 years ago. So I'm just making sure it is accurate to what actually he does. And he and I are working on that together. And then now that the staff is unionized, so that goes to the union to approve the job description first, and then it gets posted internally for 2 weeks. See if anyone's interested, and then if nobody is interested, then it'll go out to the outside, or if there's no one qualified, obviously, for it. So internally, so that's the process now that we have for that.
Is there any update on the lighting?
Yeah, that was nice.
Yeah, there's.
Your note in the report didn't. It's very neutral.
Yeah,
Lighting is a
very-
priority.
Well, I'll say yes. I'll say that I had a really great meeting with Stephen King, not the author, and he'd never been even top to bottom to the whole in the library, so I gave him a full tour and I showed him every single possible small thing that was wrong with the library, and he took very copious notes. So it is one of those periods where, because when David Lane left the DPW, like they have yet to permanently replace that overall head position, and of course now they are waiting until we get a new town manager to fill any of department head level positions. So they've had 2 different people who have been interested in position, kind of tag teaming, being the head of operations for the DPW. So it just went back to Rob Deaver again. So Stephen King was doing it for a little while. Rob Deaver did it first, then Stephen did it, and now it's back to Rob again. So I am back to poking them. So this was, the lighting was, the money is it's part of the warrant article for capital projects. So it's there, it's just a matter of getting it scheduled. The DPW is still down, I think, like 8 people. It's like a lot of people. It's a lot of people that they are down right now. So
it is funded. It's just a matter of.
So it is funded, and it will be, as far as I know, an outside contractor who will come and do it. So it's the point of them getting it scheduled. But of course, they like to have somebody there, and of course, I need to have foreknowledge, right? Because we'll probably have to close the floor, for a couple of days while they do the project and all that stuff too. So just waiting, and they asked me when was, and then there's no, like, when's the best time? I'm like, when it's not school vacation week, like that just is basically, any other time we can make it work as long as I know, when it's going to happen. So, poking, it's the consistent poking that has happened, with that. So.
Well, thank you.
Thank you.
Yes. Yeah, it's what you got to do. Some poking. Any other questions? People smiling. People are smiling over there. And then otherwise, it's, I don't want to say it's quiet, but it's kind of like in that interesting period of time where schools you know, everybody's gotten back into the swing of their lives with school and everything, and so then the holidays come up and everything. But the friends, I did I put this one in here? I don't
You
think
did.
put
I
it
just
in.
added it to my calendar.
The other thing that's happening actually tomorrow night, if anybody happens to be around, is Mean Girls is gonna happen at the high school, and so they're having like a little pre-show at the library
What
tomorrow
is that?
night. It's like, so Mean Girls the musical is going to be at
Okay.
the high school, and so they're going to have little selections from the show performed tomorrow night at the library, and they're also going to have the Nan Project, who is all about they're an organization that does peer counseling for kids, and they also, you know, it's suicide prevention and stuff like that. So they're going to intersperse some of the selections with some speakers from the Nan Project as well. So kind of. So it's a really nice idea. Like it's the first time the Friends are doing something kind of like at this level. So I think it's like a really cool idea, and I'm sure they'll have a good time. Like not a lot of people have signed up, but I think a lot of people are just going to show up, you know, because all the kids and all their friends will come and the parents, and there'll be a lot of people there in the end. So that's going to be cool, really, tomorrow night. That's going to be great. It is, I think it's 6:30, which I have to look, but I think that's right. Yeah. So that's like great. And otherwise, you know, just the regular, just all the regular stuff.
Now, when is this to start, the program, Mean Girl?
So at the high school,
No.
or
at
just
the
like
library.
it's gonna be tomorrow. I think it's 6:30. I believe it's 6:30.
Okay.
I believe that's correct. Any other questions? Things? No. Yes. Otherwise, it's been I guess normal. As whatever normal there is, it's kind of has been normal.
Okay, so we can move on to new business. And you all have this in your folder, the Peabody Institute Library of Danvers. So those of us who were on this little subcommittee met, and has everyone had a chance to read it? I'll give you a few moments to go over that.
You talking old business?
No.
Yeah,
New
old business.
Or no,
Yeah,
it's old
no,
business.
it's old
Under
business.
old business.
Yeah, it's
Oh,
under,
I'm sorry.
It is old business.
Tuition reimbursement. Sorry, we're still under old business. A, tuition reimbursement / scholarships subcommittee report. Okay, so we wanted to rename it. We didn't really want it to be a tuition reimbursement. We'd rather it be a scholarship. We want to do more for the employees of the library, make it a more positive work environment for them. And if they do want to go move on to get their master's, and there really isn't another program they can be in. There's not just courses they can take at a local college. It pretty much is a Master's of Library Science is what they'd be getting at this point in their career. So we kept it as the scholarship policy of MLS courses. So people working on their master's or working towards their master's, regardless of how quickly or slowly they're doing that. We wanted to make it more of a scholarship and give it up front. We'll have an application that they'll need to submit. Why was this yellow?
I don't know. That was what showed up as in the thing you sent me.
Oh, did I? I highlighted that? Okay. I don't remember what I do from day to day. Okay, perfect. That's perfect. So one of the things we wanted to do was to keep it, to help make the library a better place to work, was give them something. And a lot of libraries have programs like this. We didn't, so we wanted to do that for our employees. So if they do want to move ahead in the field, we're going to help them do that by giving out scholarships. We didn't limit it to a specific number. We just have a number per year that we want to decide on, and we'll decide when we get the applications how much we're going to fund. We also lowered it from 1 year to 6 months. And we'll gift up to 50% of the tuition costs. And again, that will be made apparent in the application. We'll see what they're putting out and where they're taking the courses. Most of them are online now. So, and there's many different programs they can take, but we'll see all of that with the application that comes in. One of the things for when we decide to give the scholarship, to keep it fair, we had talked about, none of this is set in stone. We're bringing it to the committee tonight to see if anybody else has any input. We wanted anything taken out that we could possibly, if we had a problem with the specific employee, a particular person on the committee, we wanted anything omitted that would make it personal. We just want the course, how long the person's been with us, and how relevant it is to the job, to see if that's something we want to fund for them. So that's what was highlighted here. And you can just see that we'll just be calling them applicant 1 or applicant 2 instead of using their names, so that it's more fair.
Yeah, part of the application obviously is, you know, they have to be in good standing with the library as an employee. So that would be vetted as well through the application process. So it's also because we are a public meeting, we don't want to, these are people's personal information, so we don't want to
giving names out to the public.
So.
So has everyone read through this? Does anyone have any comments?
So there's no cap on how much money per
We don't.
staff member?
No, because some people will be taking more courses. Some people want to get through their master's fairly quickly. Other people are just taking maybe a program every other semester.
And so there's no cap on per year how much
No.
to spend on this?
Well, no. There we discussed a cap, a general cap for spending on the scholarship program, but we decided to leave it open-ended as to how much one person, for example, could, to be able to be flexible with demand. If there's only one person applying every year, there's no reason why we can't help them more if we are allocating this amount of money. Whereas if it turned out there were many applicants, they would receive much less in each of them. So we left a lot of it open-ended so that the board could make decisions without it being in violation of our policy.
So should the cap be in here at least?
We need to discuss it still.
Yeah, we didn't have it's about an amount. But
Well, I think hearing
Yes.
what they said tonight was a good indicator that we don't want more than 5% taken out a year with everything, so that sort of caps us on how much we can actually give out after everything the library gets. In general, we only have an amount left that we need to work with. So I think that would some sort of language in there so that we're not bleeding this dry.
Definitely a cap on annual spending on the scholarship program.
And so that might be a better way to do it, is a percentage of what we have instead of a dollar amount.
Well,
I would
can't be
suggest a dollar amount.
Yeah, it can't be a percentage because we don't know what our other expenses are going to be per month. So it can't be a percentage. It's going to have to be a dollar amount and stick to that dollar amount. And then my only other concern going forward is seeming like we're being arbitrary or a little bit capricious with the amounts that each person is getting, even though there's no indicator on who the person would be. I just worry about any potential of seeming like some person might not be getting as much as another. I don't know. I get so I guess I'm wondering how you keep with not knowing how are we going to know that the same employee isn't getting, say we get more
More
applications in and we're reaching our limit of spending. The whole idea was that we were going to be even with people and not have one person getting more courses paid for. So how would you what is the mechanism in case that happens?
It would be in the application.
So that's why we made 2 application deadlines throughout the year. So say we allocate $20,000 for the scholarship program. it would be we have $10,000 to allocate after all the applications come in on May 1st, and then 10,000 more to allocate after all the applications come in on November 1st. And it would be up to us collectively as a board to decide how to allocate that money or if to allocate up to that cap based on the applications that we have. So if there's only one applicant and they are deserving and we have the money to spend, then we can discuss that as a board. That's why the scholarship framework, I think, is so beneficial to everybody, because the fact is that it's a scholarship that's capped at this much, and we make our collective decision about how to equitably distribute that on a twice annual basis.
And we can also do in the application, because that's something that we haven't even discussed on what's going to be on the application, is like, okay, how many times have you received money from the board? You can put that in the application so that as part of our review, we can see that number.
Right. I
not
think there
necessarily
needs to be
person's
some,
name,
there
but
has
just-
to be some tracking. There has to be some way to track, I
Yeah.
think.
so that if we do get like 5 applications,
Right.
like, okay, you've already gotten money this year.
Right. Well,
We're going to
right.
go to everybody else before.
Yeah.
we go
Right.
to
Yeah.
you.
There's got to be some way to track that.
Sure.
And that we can do. But as long as we've got the money, we just wanted it to
But-
be more of a positive thing for the employees rather than, this is the limit, this is all you can do. And the reality is many of our employees already have their master's in library science. So there's really not that many people that are going to be applying for the Masters of Library Science programs. So I don't think that's ever going to be an issue where we're going to have too many people applying. It may come up, but again, if we've got the cap, then it's up to us to decide how we're going to divvy the money up and who we're going to give it to.
And I can say that as of right now, I know of 2 people who can apply for this, and there is a potential 3rd one that could be coming.
Great.
Yeah.
Wonderful.
And it'll just keep our people at the, educated.
One thing that I would like to ask you, Noelle, and maybe we'll need some time to go back and take a look, but if we could account for all the other miscellaneous spending in the withdrawals from the financial advisors.
That's
Yeah.
usually that last.
That's in
Yeah.
the
page,
packets.
Oh,
that there.
but I mean, like, I guess without going through each month by month, like if we could
We could get a summary.
get a
maybe.
summary of the year,
Yeah.
or
Yeah, I can see what Ginny can pull together. Because I said, like, usually it's mostly archive. It's like it'll be like archives, professional development, programs, and then usually anything that's sort of some sundries kind of thing. So if we're paying for some food for an event or something like that, like some things like that, will come out of there. But I mean, it's one of those things. Like, it adds up over time. It's usually never a ton, but but we also will pay for, Bob Gimon's, fees out of that stock of money, like all of that kind of stuff.
yeah, I mean, it's just I haven't been here long enough to really understand like how those things came to be designated as expenses that come out of the trustees fund as opposed to I'm just curious about that.
Yeah. For the most part, I mean, from what I know, and I don't know,
Like the archives and
if like Natalie or Julie or Rini, who've been here longer, might remember, for some reason, and I don't know why, I don't know the reasoning of this, like the $20,000, like that they were kind of mentioning, was like the number that was kind of set upon as, here's money that the trustees are giving for whatever uses that the library needs.
Which is in the
Per
budget.
year. Yeah, which is
in the budget
so
form.
like, and so yeah, part of our budget is to be like, there's $20,000 that we're counting on, quote unquote, from the trust fund. Like most libraries don't have a trust fund, or other extra monies like that. So a lot of times things like my old library, all of the program money that we got for any programs came from the Friends of the Library. So they paid for like museum passes and all the programming, so that we can have programming come from another source is like amazing, right? Because it's great to not have to worry about it because you get a lot of limits. And so some things like that you don't have to worry about so much was that. I think, again, I wasn't here when that number was decided on. I don't know how that number got decided in the first place, but it is like a nice sum. But when I first came and I was meeting with our old bookkeeper, Sue Contos, she was saying at the time that usually we used under the 20,000, like we weren't using 20,000, we were using maybe 14,000 or 12,000 or something like that. So it wasn't actually that we were expending it most of the time. And then, it's just been that very recently that we revived this tuition reimbursement policy that's coming out of there as well. So
that's what pushed it from 20,000 to 33.
yes, yes,
Okay.
yeah, because we're not doing any other new spending. And generally, like anything that's a bigger, because if I wanted to have something that was going to be beyond that 20, I would come and ask, right, and say like, hey, can we have extra money for something, right? Otherwise, I take money out of state aid for projects or whatever. So
Great.
Yeah.
Thank you.
Yeah, of course.
So, like I said, we do need to develop an application for this. But does anyone have any questions on what was submitted or what you just received?
I asked my question, so I'm all set.
And I'll just read. So you're saying the board may gift up to 50%, but it could be less depending on what you have.
So the expectation would be that you're applying for a scholarship that could be valued,
so it could be $1,000, it could be $5,000. You don't know
Yeah.
depending on what's available.
but not more than 50% of the cost of the course.
Okay.
We talked about, ensuring that we would be gaining serious applicants who had their own vested interest and weren't just going to sign up for classes because they were free, for example. That's not,
And my other question about this too, it doesn't specifically say, is so say somebody's taking 2 classes simultaneously. Is it like for one? Is it a one course that they're getting money for? Is it like if they're taking a couple at the same time? Does it matter? I guess.
I don't
No.
think.
So it's just like that one, whatever it is for that period of time that they're taking is what they can apply for. Okay.
And if no one else is applying and we've got the funds, we might do 50% of all of the classes that they're applying for. If we've got multiple people and we're getting a little thin, we might do 30-40%, or we might do people that haven't received scholarships. It'll just be very dependent on who's applying and how many people.
I mean,
yeah,
the language of how much definitely needs to be in here before we take any vote on
Oh,
this.
for sure. I actually
Okay.
was going to suggest that the ad hoc committee ought to reconvene to reconsider, given a lot of the information that was shared tonight, and then we can potentially put this to a vote at our next meeting. Or
My one other question, I know in the old policy that if a person was full-time or part-time
Yeah.
mattered, like how much they might, percentage
Yes.
of that, is that still gonna?
yeah, well, I mean, we did discuss that, and
Yes, it's
I
not-
think
it
we
doesn't
all
look
were in
like it's in
agreement that
there,
it ought
but
to be
yeah.
taken into consideration, but I don't think it made it into the language.
Okay, yeah, that was just my only other question, was if they're part-time, would they get, if they work 20 hours, are they gonna get half as much, that kind of thing, if there's the percentages that are gonna come into play if they're part-time versus full-time.
So my only other question was, in doing your research, what libraries contributed to the education of the staff members out of their budget? So in other words, libraries that don't have trust funds, they have a line item in their budget that
Some do.
okay.
So that's actually a good question that I'm not sure of the answer to. I mean, I know a variety of libraries. There are some libraries that do, will reimburse people fully, like 100% for courses they take. I know like Andover is one of them. But I'm actually not sure where their money comes from that they're reimbursing for. But a lot of the libraries I know that do it tend to have be from wealthier communities who do have some kind of endowment sort of fund or trust fund of some kind.
So so libraries comparable to ours, or from a city like a Salem or a Peabody or whatever, they do not reimburse their staff.
It's much rarer to find. Yeah, it's rarer to find that, and mostly it's because they don't have some kind of fund that they can pull from that money from. So like they might pay for professional development, like the classes or something like that, like one-off workshops or things like that, but they're less likely to reimburse for the MLS, mostly just because they don't have the funding for it.
So historically, our professional development it was more for a conference, not for a class, for the staff.
Well, interestingly, right, because the policy that we had approved a couple of years ago, that was actually a 30-year-old policy for MLS classes, so people taking MLS classes, but it was just the $1,000 because that was the times, right? So interestingly, the reimbursement policy here has been in place for MLS courses specifically, and then other professional development. Like our professional development fund is not this, right? Like, so this is separate than professional development for conferences and things like that. So see them as two different tracks kind of thing.
So does the professional development budget get used completely every year for professional development?
Yes.
Or is there ever any money left over that could go towards?
So what we've been doing with the professional, so we've been mostly having the professional development fund coming out of our state aid money. And so what we kind of started doing, because prior to this, previous directors were using it more for themselves and not for the staff, we'll just say. So the staff was not able to use it. So what my thing has been going since then is just like to see how much, now that they're aware of it and they can use it, I've just been letting them use it as much as they want to see how much I'm actually spending on the professional development. So we have been using it up. Last year we used it up, and then I think we went over last year, and then this year we should also be on track to go over it again. So I wanted to be able to set a more realistic budget once I saw how much we were using of it. So yes, we are using it, which is a good thing. It's a great thing.
Okay.
So people are feeling like they can go and get to professional development, and go to conferences and things.
Mm-hmm.
And I pay for their memberships and professional organizations with it as well.
We're just really fortunate that we have this money, and this is something we can do for the employees. So I'm all in favor of it. Hopefully we'll get more employees staying longer because of how they're being treated. All right, so I'll get with the committee and we'll pick another day. We'll add these items into it. And also, because there weren't a lot of scholarships, so we're going to have to create an application, because we did look and there weren't many libraries doing this type of thing. So we're going to have to look at generic applications and then change or add what we want to those. So we'll discuss that with the next meeting, our ad hoc meeting. Okay. Any other questions about the fund?
I'll just ask too. I'm just being nitpicky now. But when you're saying the applications for May and November, do we have a date as far, is it like May 1st and November 1st? Or are we like May 15th and November 15th?
We were hoping to chat with you. Yeah, we had suggested May 1st and November 1st, but we were looking for your input as well.
Okay.
And you thought those months would work?
Yeah, I thought we kind of talked about it
yeah,
to a degree, and we kind of looked at a bunch of library school programs, like when because you should have an idea, right, at the end of any given semester about following semester and what you want to take. So in May you should know about.
We will definitely add more specificity to the language for the next draft.
All right. Just so I know when I have to tell people, get your application in.
Yeah, well, we'll get that.
Thank you for your note taking.
And where are we now?
New business.
No. I was thinking the date.
It's
I know
November now, but we're not approved for.
No, I
so
know. No, my brain went off on what about the people in between here? We'll deal with that. Okay, So any new business?
Nope.
No? Okay, and,
I'll make a motion to adjourn.
I
Thank
second it.
you. Second, okay, all in favor?
All right.
Aye.
Motion moves, thank you.